Crypto family, stop everything you're doing right now because Sei Network just dropped the most explosive update of 2025, and if you're not paying attention, you're about to miss a potential moonshot that could reshape the entire DeFi landscape. I'm talking about native USDC integration, AI agents that can execute transactions autonomously, and a technical setup that's screaming bullish reversal. We're looking at a project that just went from interesting altcoin to institutional-grade DeFi powerhouse literally overnight. The price action? SEI has already pumped from 13 cents to 39 cents. That's a 200% move. But the technicals I'm seeing suggest we're just getting started. I'm tracking a potential target of 43 cents, which represents another 25% upside from current levels. But here's the kicker. 95% of crypto Twitter is sleeping on this story, while the smart money is quietly accumulating. Stay with me because by the end of this video you'll understand exactly why Sei could be the sleeper hit of this bull run. Alright, let me break down what Sei Network just accomplished because this isn't just another "we added a new feature" announcement. This is a complete ecosystem transformation that puts them in direct competition with Solana, Ethereum, and every major Layer 1 blockchain. First, the native USDC integration. Now this might sound boring to some of you, but let me explain why this is absolutely massive. Previously, if you wanted to use USDC on Sei, you had to go through bridged versions like USDC done via Noble Protocol. That meant extra steps, bridge fees, slippage, and most importantly, institutional friction. But now, Circle, the company behind USDC with a $34 billion market cap, has officially issued native USDC directly on Sei Network. No bridges, no third-party wrappers, no additional smart contract risks. This is the real deal, backed by the same reserves that power USDC on Ethereum and other major chains. Why does this matter for price action? Because institutional money loves native stablecoins. When Polygon got native USDC, we saw a 40% pump in Matic. When Avalanche got it, AVAX went parabolic. Pattern recognition, people. But wait, it gets better. Sei also activated Circle's cross-chain transfer protocol v2, CCTP v2 for short. This allows seamless, near-instant transfers of USDC between Sei and other major blockchains like Ethereum, Arbitrum, and Base. We're talking about the kind of infrastructure that market makers and DeFi whales absolutely require. The numbers don't lie. Sei's stablecoin supply has increased by 2% in just 30 days, now exceeding $229 million. The number of stablecoin addresses has exploded by 26% to 35,000 unique holders. And here's the mind-blowing stat. Adjusted transaction volume has jumped 283% to $54.1 billion. But that's not even the craziest part. In mid-July, Sei partnered with Anthropic, yes, the AI company behind Claude, to integrate the Model Context Protocol. This means AI agents can now read Sei's blockchain data in real time and execute transactions autonomously. Imagine an AI that can analyze smart contracts, detect arbitrage opportunities, execute complex DeFi strategies, and rebalance portfolios without any human intervention. We're literally watching the birth of autonomous finance, and Sei is positioning itself as the railroad tracks for this AI-driven future. Now let's talk about why I've been absolutely glued to SEI's price charts, because what I'm seeing from a technical analysis perspective is giving me serious FOMO. SEI has been on an absolute tear, moving from a low of 13 cents in April to a recent high of 39 cents. That's a 200% move in just a few months, but here's what most traders are missing. This isn't just a random pump, this is a textbook bullish reversal pattern playing out in real time. The token has formed what we call an inverse head and shoulders pattern. For those who don't know, this is one of the most reliable reversal signals in technical analysis. It typically forms after extended downtrends and signals that selling pressure is exhausted while buying pressure is building. The left shoulder formed around 15 cents, the head bottomed at 13 cents, and the right shoulder tested 16 cents before the explosive breakout above 20 cents. When these patterns complete, they often lead to price targets equal to the height of the pattern projected upward from the neckline. But here's where it gets really interesting. SEI has also formed what we call a golden cross. This happens when the 50-day moving average crosses above the 200-day moving average, and it's considered one of the most bullish long-term signals in technical analysis. Historically, when major altcoins form golden crosses during bull markets, they tend to see sustained rallies that can last months. Bitcoin's golden cross in 2020 preceded a 400% rally. Ethereum's golden cross in early 2021 led to a 800% pump to its all-time high. Now, I'm not saying SEI is going to do 400%, but the pattern is there, the fundamentals are aligning, and the market structure is screaming bullish continuation. Currently, SEI is forming what's called a doji candlestick pattern, basically a moment of indecision where bulls and bears are in perfect balance. This often happens right before major directional moves, and given the bullish context, I'm leaning heavily toward upside resolution. The key resistance level I'm watching is 39 cents, the recent high. If SEI can break above this level with volume, the next major target based on Fibonacci retracement levels is 43 cents. That's the 50% retracement of the entire bear market decline, and it represents approximately 25% upside from current levels. But here's what has me most excited: the volume profile. During the recent pullback, volume has been declining, which suggests this is just a healthy consolidation rather than the start of a new downtrend. Smart money doesn't sell on declining volume, they accumulate. Alright, let me tie all of this together and explain why I think Sei Network could be one of the most explosive plays in crypto right now. We've got three major catalysts converging at the perfect time. Catalyst 1, infrastructure maturation, native USDC and CCTP v2 aren't just features. They're the foundation for institutional adoption. When Coinbase launches their institutional custody for an altcoin, one of the first things they look for is native stablecoin support. When market makers evaluate which chains to provide liquidity on, seamless cross-chain transfers are non-negotiable. Sei just checked both of these boxes in a single announcement. That's not coincidence. That's strategic positioning for the next wave of institutional capital. Catalyst 2, AI integration, first mover advantage. While everyone else is talking about AI tokens and meme coins, Sei is actually building the infrastructure for AI native finance. The partnership with Anthropic isn't just marketing, it's giving AI agents direct access to execute on-chain transactions. Think about it. We're entering an era where AI will manage trillions of dollars in assets. Which blockchain do you think those AI systems will prefer? One where they need human intervention for every transaction, or one where they can operate autonomously with native stablecoin support? Catalyst 3, technical breakout plus golden cross. The golden cross formation combined with the inverse head and shoulders pattern creates what I call a double confirmation setup. These don't happen often, but when they do, they tend to produce some of the most profitable trades in crypto. Add in the Fibonacci retracement target at 43 cents, and we've got a clear risk-reward setup with defined entry and exit points. My personal strategy? I'm watching for a decisive break above 39 cents with volume expansion. If we get that confirmation, I'm targeting 43 cents as the primary objective, with a potential extension to 50 cents if the momentum continues. Stop loss would be placed below the recent swing low around 32 cents. Giving us roughly a 2-1 risk-reward ratio on the conservative target and 3-1 on the extended target. Risk management. As always, position sizing is critical. This is still an altcoin with inherent volatility, so I'm not betting the farm. But given the fundamental catalysts and technical setup, I'm definitely allocating a meaningful portion of my alt portfolio to this play. The beautiful thing about this setup is that we're not chasing a pump. We're positioning ahead of what could be a major re-rating as the market realizes that Sei has quietly become one of the most technically advanced blockchain ecosystems in crypto. Look, here's what I want you to take away from this analysis. Sei Network isn't just another layer 1 trying to compete on speed or fees. They're building the infrastructure for the next generation of decentralized finance, one where AI agents, institutional capital, and retail users can all interact seamlessly. The native USDC integration removes the last major friction point for institutional adoption. The AI integration positions them at the forefront of autonomous finance. And the technical setup suggests the market is finally starting to recognize this value. We're at one of those inflection points where fundamentals and technicals are perfectly aligned. The question isn't whether Sei will succeed. They've already proven their technology works and their partnerships are legit. The question is whether you'll position yourself before or after the mainstream crypto media catches on. If you found this analysis valuable, smash that like button and let me know in the comments. Are you bullish on Sei's AI integration, or do you think I'm overestimating the impact? I read every single comment and love hearing your perspectives. And remember, if you want to get these deep dive analyses before they go public, make sure you're subscribed with notifications on. The crypto market moves fast, and being early to these infrastructure plays can make the difference between life-changing gains and watching from the sidelines. Until next time, stay profitable and keep stacking. This content is for educational and entertainment purposes only, and should not be considered financial advice. Cryptocurrency investments carry significant risk, including the potential loss of principal. I may hold positions in the cryptocurrencies discussed, including SEI tokens. Always do your own research and consult with a qualified financial advisor before making any investment decisions. Past performance does not guarantee future results, and all trading involves risk of loss. The crypto market is highly volatile and speculative. Never invest more than you can afford to lose.